All right, welcome everyone. It is September 17th, 2025, and we are at a really critical moment for global markets. In just a few hours, the US Federal Reserve is going to announce its latest interest rate decision, and to say the world is holding its breath, well, that doesn't even begin to cover it. Let's break down exactly what's at stake.
You know, this isn't just any old Fed meeting. People are calling it one of the most extraordinary in recent memory. So why all the drama? Well, it's because this is all happening right in the middle of a perfect storm. We've got conflicting economic data, we've got intense political pressure on the Fed's independence, and deep divisions within the committee itself. The stakes honestly could not be higher. So here's our game plan. First, we're going to take a wide look at global markets. Then we'll zoom in on investor sentiment and the dollar's big moment. From there, we'll go deep inside the Fed's decision-making process, and finally, we'll look at what's coming up in the week ahead.
All right, let's kick things off with our first section, global markets on hold. The mood across trading floors right now, from Asia to Europe to the US, is just one of overwhelming caution. Nobody is making any big bets just yet.
If we take a look at the big picture, it's really a tale of two markets right now. US futures for the S&P and NASDAQ are basically flat. European stocks are kind of mixed, but then there's this one pocket of incredible activity. Chinese tech stocks, as measured by the Hang Seng Tech Index, have just soared to a 4-year high. And this is all being driven by this huge wave of AI optimism and a feeling that China is building its own powerful tech ecosystem. It's a real standout in an otherwise very quiet market.
So, all this caution, it really tells a story, doesn't it? To really understand the psychology behind all this waiting, we need to look past the headline numbers and try to gauge what investors are actually feeling. And a great tool for this is looking at something called stock price strength. It's a key part of these big market sentiment indices. Now, this isn't about how high the S&P 500 is trading. Instead, it's all about market breadth. Basically, how many individual stocks are hitting new 52-week highs compared to those hitting new lows. This tells us if a rally is actually healthy and widespread, or if it's just a few mega-cap stocks dragging the whole index up.
And how we read this is actually pretty simple. When lots and lots of stocks are hitting new highs, it signals greed and confidence. When more are hitting new lows, it signals fear. So where are we right now? Well, we're kind of in this middle ground. The market isn't showing extreme fear, but it's definitely not showing broad-based greed either. Investors are basically paused, waiting for a crystal clear signal from the Fed before they commit one way or the other.
Okay, let's switch gears a bit, because one of the biggest stories heading into this meeting is what's happening in the currency markets, specifically with the US dollar.
The trend here is just undeniable. The US dollar index has fallen to its lowest level since 2022. Against the euro, it's gotten so weak that the EUR-USD pair is getting close to a 4-year high, right near that key 1.20 level. And against China's offshore yuan, the dollar has weakened so much that the yuan has pretty much erased all of its losses since November 2020. So what's going on? Well, traders are selling the dollar, betting that the Fed is about to cut rates, which makes holding dollars a lot less attractive.
We also have to keep a really close eye on the Japanese yen. The dollar's weakness there is kind of a two-part story. Not only is the market expecting the Fed to cut rates, but traders are also watching the Bank of Japan, which meets later this week. And there's this growing feeling that the BOJ might be getting ready to hike rates, which would create this massive policy split that could send the dollar even lower against the yen. And all of that brings us to the main event, inside the Fed's decision. This is where we break down the incredibly complex puzzle that Fed Chair Jerome Powell is facing. We're talking conflicting data, internal divisions, and some really unprecedented political drama.
So first off, what is the market actually betting on? Well, based on the data from the CME FedWatch tool, a rate cut is pretty much a done deal. There's an overwhelming 88% probability for a standard 25 basis point cut. But look at that little slice there, a 12% chance priced in for a bigger 50 basis point cut. That's a sign of the pressure for some more aggressive action.
And this debate is happening right inside the Fed itself. On one side, we have the doves, like Governor Christopher Waller and the new appointee Stephen Miron. They're looking at a shaky labor market and are arguing for a big 50 basis point cut to help support the economy. But on the other side, we have the hawks. They're looking at strong retail sales and a robust consumer, and they see a risk that inflation could stay stubbornly high. They're arguing for a more cautious 25 basis point cut, or maybe even no cut at all. It's totally possible we could see a rare three-way split in the vote today.
And as if that wasn't enough, there's this whole layer of political drama hanging over the meeting. The White House has been trying to oust Fed Governor Lisa Cook, a move that was just blocked by an appeals court, which means she gets to vote today. This has raised some serious questions about the Fed's independence from political pressure, creating what some commentators are calling a major risk. As they put it, markets are comfortable with a Fed that has the degree of independence. Any shift from that will be very risky.
This all leads us to the central conflict of the day, which we can see in the dot plot. This is basically a chart where Fed officials anonymously project where they think interest rates are going. Right now, the market is pricing in about 6 rate cuts by the end of 2026. That is way more aggressive than what the Fed's own dot plot showed back in June. So the big question is, will the new dot plot and Chair Powell's press conference move closer to the market's view, or will they push back hard against it?
And while the Fed is absolutely the star of the show today, its decision doesn't happen in a vacuum. It is not the only central bank making waves this week.
It's a jam-packed schedule. Based on the Investing.com calendar, after the Fed's expected cut today, we have the Bank of England tomorrow. With UK inflation staying sticky, the consensus is that they're going to keep rates on hold. Then on Friday, all eyes turn to the Bank of Japan. Now, while no one expects a rate hike this time, traders will be listening very carefully for any hawkish language that might signal a hike is coming soon.
So, here are the times to circle on our calendars. The official statement, with the rate decision and that all-important dot plot, drops at exactly 2 p.m. Eastern Time. That's when we'll get the first big market reaction. But the real volatility, the real fireworks, could come 30 minutes later, at 2:30 p.m. Eastern, when Chair Powell steps up to the podium for his press conference.
And that leaves us with a final pressing question. Will Jerome Powell deliver a hawkish surprise that pushes back against the market's hopes for deep rate cuts? Or will the immense political pressure and a weakening labor market force the Fed's hand down a more aggressive easing path, shaping the direction of the entire global economy for years to come? In just a few hours, we'll have our answer. Thanks for watching. Don't forget to like and subscribe.